Hello everybody, Taurus Investing coming at you today with 3 dividend stocks that you can buy and hold forever. All of these are unique because they are all dividend kings, meaning that they have increased their dividend for 50 years or more. Now, if you're new, please hit the subscribe button. I greatly appreciate it. Drop a like down below. Those two things, they're super free and easy to do. Makes the YouTube algorithm happy, and I greatly appreciate it. It means so much to me. We are closing in on 1,000 subs, and let's keep on marching. No, this financial advice. Always do your own research for investing. Now, before we dive into the stocks, we're going to be taking a look at Johnson & Johnson, Genuine Parts Company, and CocaCola. I'm going to show you into my portfolio. I will always share this with you. I will not hide this. I do not have any intentions of hiding this. Year to date, we are up 26.83%. The SP 500 is up 20.15%. Now, these are holdings, our allocations, how everything's looking. I am very happy with his portfolio. I know I added another position, but between Celsius and Ulta, it doesn't even make up 5% of my portfolio. So 4.5% is like growth stocks. 95.5% is dividend stocks. So I still think it's okay. Now, this is how everything is looking. Ulta has taken off like a rocket. We are up 19% on that, up 13% with our Canadian National Railway, and 10.5% in our Texas Roadhouse. 3 bottom positions, one of them being a green one, extra space storage. We are green in that. Again, after being down 26%, that's just shocking to me. SCHD pretty much right at even, and then Hershey 11% still in the red. I was buying this a little bit more in the 180s, but it has went up in the 190s area now. So I'm just going to sit, let it wait, and if it drops more, I'll buy more. Now, this stock's we're going to take a look at. Johnson & Johnson. This is an old reliable in the pharmaceutical companies. Just a free cash flow yield of 3.8%, got a dividend yield 3%, and a payout ratio a little bit on the high side, but never fear. This company has been increasing their dividend through wars, COVID, financial crisis, dot-com bubble. If anyone's going to be able to do it, it's them. And they are down 11% year to date. Take a look here at the revenue. Revenue's been growing consistently at a rate of 3.5% over the last 10 years. They do have a little bit of accelerated growth here in the last couple of years, which is nice. Like to see it. Free cash flow been increased at a rate of 3.27% over the last 10 years. Again, all these are mature companies. You're not going to have explosive growth out of these. These are just old reliables. Set them and forget them. EPS been growing at a rate of 5.72% over the last 10 years. Their cash to debt situation, beautiful. They almost have as much cash as they do debt. Debt's $26 billion. Their EBITDA is $24 billion. My general rule of thumb, I don't like companies that have 3 times or more than 3 times their EBITDA in debt. And this definitely does not. Dividend's been increased at a rate of 6% over the last 10 years. So this is a nice little compounder there. Some inflation beating dividend growth usually. I mean, inflation's usually around 2.5% or so. And let's take a look here. Shares outstanding. Not too much going on, but they are buying back a little bit here and there. And return on capital employed, besides 2021, looks like it is in the 16 to 18 area very consistently. Now, as I did say, all these have been increasing their dividend for over 50 years. J&J has been increasing their dividend for 61 consecutive years. Next up, Genuine Parts Company. This one's been one I've been looking at a little bit more here lately. It's on a pretty decent dip, over 20%. Got just free cash flow yield of 4.24%, dividend yield 2.82%, payout ratio a little bit over 42%. Now, revenue's been increasing at a rate of 5.44% over the last 10 years. Again, just pretty consistent growth. Free cash flow, 3.43% over the last 10 years, 11.36% in the last 5. So a little bit of accelerated growth there. Love to see that. EPS, 7.22% over the last 10 years. Again, very nice, just consistent growth. 2020, everything had the 2020 dip, it seems. Debt, they had $3 billion in debt. Their EBITDA is right at $2 billion. So again, that falls right in line with the no more than 3 times ratio when it comes to debt to EBITDA ratio. Dividend's been increased at a rate of 5.86% over the last 10 years. Very nice. Shares outstanding, a little bit here and there, less than 1% over the last 10 years, still going down though. And the return on capital employed, as you see here, 13% in 2019, 2020 was 13.6, then 16% in 2021, and 18.6% in 2022. So a return on capital employed is growing over time. Love to see that as well. Now the dividend of Genuine Parts has been increasing over the last 67 years, so very, very nice. And lastly, we got Coca-Cola. Coca-Cola down 6.85% over this year. Just free cash flow yield of a 3.91%, got a dividend yield of 3.15%, a payout ratio of 73.6%, so not too bad there. It's usually right around where it hovers. Revenue's been growing over the last 5 years at a rate of 3.96%. They have some little bit of ups and downs going on here, but they have changed a lot of their product lines here over the last couple years, and I think that they're going to get right back on track with some growth. As you see here in 2020, 2021, and 2022, we have nice consistent growth at a rate of 14%. Love to see that, especially if something that's been around as long as Coca-Cola. Free cash flow, again, over the last 5 years, 11.91%. So, yep, right back in line. They are also growing their free cash flow again. They had a couple bad years there where things kind of were more zigzaggy, but again, I think they're going to get things back in order. EPS been growing at a rate of right at 1% over the last 10 years. Again, pretty flat, but if you see here, since 2018, things are trending up into the right direction. Debt's 36 billion. Their EBITDA is 13.8 billion. Again, falls right in line with my 3-time ratio rule that I like. And the dividend's been increasing at a rate of 5.09% over the last 10 years. Again, just a nice little consistent compounders. It's one of the bigger positions in Buffett's portfolio. He has owned Coca-Cola for forever and a day. EPS being, we already looked at that, blah, 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 blah. I'm getting out of order here. Shares outstanding, a little bit here and a little bit there, not too much to talk about. And the return on capital employed, market average is usually 9 to 10, and they do a pretty good job at hovering around 12 to 15% typically. The big thing with Coke that I will mention that I like a lot is their CapEx is very manageable. This is something that's not just increasing rapidly year over year. If that was the case, they would have to be forking out more and more money to make more and more money. And it's the only reason I like Coke a little bit more than Pepsi, because Pepsi's CapEx is going up, and you don't like to see that. Now, Coca-Cola, be increasing that dividend for 61 years. All these, I think, yeah, all of these, the lowest one's 61 years. Coca-Cola and Johnson & Johnson increased 61 years, and Genuine Parts increasing for 67 years. That is everything I've got for you. It's 3 dividend stocks, 3 dividend kings that you can buy and hold forever. I hope you enjoyed that. Make sure to hit the subscribe button for more. Drop a like if you haven't. And until next time, see yous.